Hey everybody, and welcome back to the channel where we discuss everything to do with the stock markets, crypto markets, and commodities markets right now, and of course our discussion about the current fundamentals, technical analysis, and just in general news. A lot's been happening in the markets. Increased volatility has been present, and we're starting to see some turnaround value. So is this the beginning of some kind of Santa rally or a bigger run? Stay tuned to find out more. See you soon, guys. All right, everybody, well, welcome back to the video, and this is our market recap for the 21st of December 2021. And you can tell straight away when it's green like this, usually it means that a lot of people are probably smiling because the market is back up. Tesla comes off support, 4.29%. And in fact, generally the market comes off a key weekly 20 moving average. S&P 500 hit support in the previous session, and we suspected it might do this. There are actually some stats that show that this does happen even regardless of the technical analysis levels. When we tend to have large gaps down, such as the gap that we had on the Monday session, the next day is no doubt very, very positive. 0.87% average for the next day coming off a Monday fall. Turnaround Tuesday, it's known for a reason, and it certainly was. So remember, some of these stats can really play out, and this has happened since 1993. That's a fairly strong number. What did occur though was we saw the futures continue their bullish run. We opened the markets across the board around 1% up, and then we had that little bit of a sell-off. Now, this was due to the fact that we hit a resistance into the open. So the futures got all the way to the resistance. They struggled in the kind of first hour to hour and a half where retail tends to trade, and you can almost pinpoint when it's shot through that resistance, because as you notice here, every one of the markets just suddenly broke through, and that was the beginning of the rest of the run for the session. IWM Russell 2000 does the best, 2.86. There is a lot of opportunity in the smaller caps right now. Nasdaq did well, and S&P 500 and Dow, they were all buying into the close, which shows us again that Wall Street was committed to the purchasing. And while we may have a potential flat day for Wednesday, flat to down, or even just slightly up, we'll look at it later. These are showing us the signs of Wall Street getting in and saying, you know what? We're ready to turn it around. XLP and XLU, these are the defensive sectors. They were down for the day. Another sign that potentially risk is back on in the markets. Semiconductors did the best. They were beaten down recently, 3.61%. Energy, 2.85. Consumer discretionary, 2.6. A lot of the sectors that have done poorly this week started to do much better. Let's get into the technical analysis. Let's start talking about here the fear index, or the VIX. This is a very important index to always be looking at. We start at around a 21 here, and this is really showing us that the market is really showing signs of recovery. When the VIX is above 20, we always need to say, okay, well, yes, that means there's increased volatility. When it drops underneath 20, that means it's stabilizing into a normal market, and it's very close to doing so. And the signs are there that we're starting to see that happen. Let's move over to gold. Gold is continuing to be a little bit of a weakness signal. We have here rejection, 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 3 days in a row. We know that it's in the middle of nowhere land when we look at the smaller time frames. Look back at our other videos about that. But really, for gold bulls, it's all about 1810. If it gets above 1810, cool, that will be fantastic. It will snap all of these rejections off. The bears will lose. But at this stage, if you came in and just looked at this chart, you'd say, look, that looks bearish. But you must also think about the smaller time frames. What's going on in the smaller time frames? And there's a lot of neutrality here. So just be careful there before going with a big short on something like gold. Silver's very similar, though silver actually is showing more strength. We've got that 2260 zone that's now been rejected twice. Should we see a closure above that, that will be significant. And I think 8-hour chart really comes through on this one. Notice no breakout on the 8-hour chart. Really great resistance level. Should we see a breakout, it's a sign, or at least the first sign, of recovery in this metal. And a lot of commodities are starting to improve over the last 24 hours. If we're talking about commodities, let's have a look here at US oil. Not a bad day trade. Got back above our 69.40 after that false break to the downside, which we saw rally in the previous session near the close. And as soon as it went through this high, boom, straight through 71.26. This now opens up our favorite level moving forward, which is buying into the 73, and then should we breach 73 for participation to really start to enter. This will solidify the base for oil, and it's been recently very downtrodden. I mean, we look at oil here on the charts. It's not hard to see why we love that 73 zone. We have rejection, so that full long leg doji, a movement up, the 20 moving average on the weekly. It's rejected again, come and tested the bottom, and then boom, straight back off that. If we closed a weekly even here and then got follow through, what a great sign or signal moving towards that 73. And a 73 plus breakout opens up 75 and even much higher points such as 79. It really could be on for oil. And remember, people like Goldman and a few other big houses are starting to call $100 on oil already, which is pretty crazy, but it is starting to move up and look a little bit better. Let's move over to Tesla and the stocks. So we'll start with Tesla here. It bounces off 900, which is always going to be a key major technical support. We do have this downward trend, which its resistance broken into. You can see the previous support here as well. Might be a bit of a problem for the Wednesday session for Tesla traders. I think this is an area of really bulls and bears fighting it out. And once we close further above here, maybe you see some good signs in the smaller time frame, day traders might come in and start to look to buy this up. So Tesla does look very interesting. It's on the downward trend line, looking to breach and looking a lot better in the zone. Daily is very similar. Nice rejection here and a strong candle. Further momentum should pressure that $1,000 again over the next couple of sessions. Let's move over to Apple. Apple did bounce. It didn't bounce as much as some would expect. There are a lot of options expiring all around these zones here in terms of calls. So we've got a lot of calls sitting about that 170, 172.50, 175. So this area here may be some resistance coming into the options expiration this week. However, it did bounce off the daily 20. We signaled that as being a key level of support. And while a lot of people are saying double top and it is back at the zone, I think Apple is a tough trade at this stage. It's mostly a tough trade because we have a lot of conflicting signals. If this is a double top, where it's closed right now, is that resistance? Is that where we should be looking to sell it off? I think day traders will come in and potentially look to sell it. It's just not well priced either on the PE ratios. There is some toughness coming into this trade. So just remember, this is a key level. You breach above here, okay, cool. Then we're going back to that 180. But around this zone, be careful for Apple traders. I think it is a zone of interest. Now, we talked about the idea of some type of value coming back into the markets, and we have to look at stocks and sectors that have been hated throughout 2021. And one of those, of course, Cathie Wood's funds, the hyper stocks, the probably worst performing sectors of the year when you start to look at them. You have a stock market that's up, you have a NASDAQ that's up, everything is looking great, but not these funds. So this could be a big double bottom moving forward. And we've discussed the idea of the volume kind of improving, the idea of breaching through that 103 and creating a double bottom base for some nice upward ticks, and even the base that's formed here in the smaller time frames. But it's really across the board. Even ARCG, the biotech industry that is in Cathie's fund over here, look at that resistance. It's a very solid level. And you can tell that if it gets through here, it's a big deal for the TA of this chart. It's been down. In fact, if we take the top to the bottom and have a look at that as a percentage, you'll notice that this fund has gone all the way down right now to 43, and at one point was down as much as 50%. So she says it's deep value. I think we're looking at this from a technical basis, and this is finding support. Again, volume has been uncharacteristically high compared to previous months around this area and zone. Should show some kind of buying pressure. Let's move over to the indices now. We know how the IWM is traded. It's traded quite well off the key zone, being this 212, 210 area. We've seen that buying. The buying followed through. And this was probably one of the easier day trades if you were looking at the markets. We pinpointed that bullish hammer in the previous session. We talked about the momentum following through. It gapped up, came down, and slammed straight back up. 220 will become the resistance because, of course, of the daily 20 moving average. That will become a resistance point of interest. We breached that zone. Next up is 226. We breached that zone. IWM is back and it's looking a lot better. So at this stage, recovery could be there, and many people are looking at this favorably, and I don't blame them. QQQ, NASDAQ, very similar here. Beautiful pattern going on. Some people will call this a morning star. and they'll say, look, we've got that gap down, kind of a negative style candle, gap down, long leg style doji or an indecision candle, gap up, and there we go. I wouldn't disagree with them there. I mean, obviously theory and practice is not always going to be the exact thing that you want to be seeing, but what a support. We saw that 379 area being support previously. It was again. And a huge reason for that is, I think, thanks to the weekly 20 moving average. Weekly 20 has been one of the better buying zones in recent times, and it's the same as the S&P 500. It hit the weekly 20. We detailed that in the previous reports, and I think the community together has really found this to be a quite accurate zone. So if we move over to the S&P 500, this is what's going to give us a little bit of a better idea of what could be in store for us in the Wednesday trading and moving forward in the next sessions and weeks coming into the end of 2021. Here's the weekly 20. We detailed again the buying pressure coming off that. Very solid across that and the NASDAQ. We move down to the daily. You can see it breached that 4,600 easily and closed above. It also closed above the daily 20 moving average, which is great. So then we go into something like a 2 hour and we think, okay, what's in store for us? Now, a lot of people will be looking for these gaps to close. I'm not sure if that's going to happen, but there is a couple of worrying areas and some areas that we should have interest in. First up is this 46 kind of 65. We have previous resistance, previous support, and it could become previous resistance again. Now, if the market is going to turn after such a great rally day, where do we expect buyers to come back in? Well, of course, that 4610, 4600 level has been such a strong zone for buyers to come back in. So maybe something like this happens, and then we breach through, and then we go back to the 4715. For the longer term analysis, once we breach this level and possibly even get above 4715, how big a deal is that? Well, it's massive, because on a daily, you can tell that 4710, 4715 has not been closed above ever since we started topping. So where's the next level, you might say? Where can we go to after if we hit all-time highs? Well, the main key is going to be around that 4,800, the monthly R2. We know in previous sessions, monthly R2s have been very, very good. So realistically, the market is looking a lot better. It's looking healthier. Things are starting to turn around. The bears are not in control quite yet. And if you are a bear in the markets, it's very simple. 20 moving average, close underneath, you can start to get excited. Then you can start to talk about double top patterns into the 20. The fact that this is most likely going to reject and move into the 50 exponential. These are all very important zones to be watching at that stage. Let's move over to the crypto markets. Are they improving? The answer is simply yes, they are. If we have a look at the 8 hour, Bitcoin is doing some good work. It's put in the base that we hoped for yesterday. That 48K was cracked and we started to see movement up. We've now got that small rejection off our downward trend line. And if we move above that, what's the next step? Well, of course, it's movement towards 52, and past 52, we enter participation phase. That would be fantastic here for Bitcoin. I would be very excited. I'm sure many of you will be out there should we get through the 52,000, but the signs are starting to show that Bitcoin and cryptocurrency are turning around. And let's have a look at a few different currencies just to make that very clear. We'll go to Ethereum first. A series of higher lows, similar rejection here, similar downward trend that could be breached up. Take a look at the daily as well. What have we got showing on Ethereum? Rejection, 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 and a bullish hammer in the previous session. All showing buyer demand is there at that price for Ethereum. And of course, Bitcoin is showing a very similar thing. And then if we go over to something like ADA, a kind of hated coin in some ways right now, and you look at something like an 8 hour on this or a 4 hour, really what has ADA been showing us? Well, in many ways, a weakening trend. Downward, lower high, lower high, lower high, lower high, equal lows, so a very nice support, and then a potential breach moving forward. Maybe that $1.30, $1.35, we're putting in place another sign that the recovery could be in and it could be happening. Because remember, the idea of a descending channel or a descending triangle here is it should have already broken to the downside. Usually it wants to do it in the last third of the pattern. It's not doing that, and it's starting to go towards the bull side. So what ends up happening? We end up getting a double bottom it snaps all of that trend line off and shows us one of the first signs of recovery. So the crypto market is looking a lot better. The stock market is looking a lot better. Maybe there is Santa rallies coming and we might see some nice consolidated small greens. Possibly we go towards that US 4,800 level by December 31st. But I would like to hear your opinion. Where do you think the market's going by December 31st? S&P 500, give me your prediction on the zone in the comments down below. Very interested to see it, guys. If you enjoyed today's video, please remember to subscribe, smash that like button, and we'll see you in the next one.